Good morning, everybody. It is the 1st of March. We're Signal Centre Talking Ball. Not sure what happened there. I was hoping to get the intro video on. Didn't seem to work.
There you
You
go,
all right,
mate.
Steve? How you
Yeah, not
doing?
too bad, thanks. Yeah, all right.
Good, good. Okay, thanks for tuning in, everybody. If you've got any requests, as always, please feel free to post them up in the stream comments, and we'll do our best to cover as many markets as we possibly can. Hope everybody had a good end to the month. We start a new one today, and we're straight in with some important economic data as well. So plenty to look forward to in the session ahead. But prior to doing that, let's have a look at the latest headlines and what's been moving markets over the past 24 hours or so. So we had US consumer confidence yesterday, which dipped to 102.9 for February from a revised number of 106 previously, and that was well below the consensus forecast of 108.5. There was an increase in the current conditions component to 152.8 from 151.1, but this was offset by a sharp downgrade in expectations components to 68.7 from 76 in January. The weak US manufacturing surveys were seen yesterday as well. The Chicago PMI index dipped to 43.6 for February from 44.3 previously. And this was the 6th successive monthly contraction, while there was easing of inflation pressures. There was some dollar demand to end the month. The dollar secured net gains yesterday into the London fix on Tuesday, with significant month-end demand for the US currency. This buying tended to offset earlier notable gains from European currencies against US currencies, but there was a fresh reversal in that this morning. We saw weaker than expected Canadian GDP yesterday as well. The data was expected with a 0.1% decline for December and no growth for the fourth quarter components, with expectations of 1.5% annual growth. We did see some improvement in the Chinese data, however. The Chinese PMI index strengthened to 52.6 for February from 50.1 previously, and that was well above the consensus forecast of 50.7. Overnight, we've had some inflation data from Australia. The Australian monthly inflation rate dipped to 7.4% from 8.4% previously, and well below the expectations of 8.1%. So that will have gone down very nicely indeed. GDP data also missed expectations with the 0.5% growth for the fourth quarter of 2022, compared with a consensus forecast of 0.8%. So pretty mixed all in all. So today we have the ISM manufacturing data. The latest number will be released later on today at 3 o'clock. The net balance of regional releases has been weaker than expected. The consensus forecasts are for a slight recovery to 47.9 from 47.4 in January, with prices data also important. So that's that for the latest headlines. A couple of requests coming in. Morning, Mark. We'll be certainly taking a look at Swiss franc versus Japanese yen and euro New Zealand dollar. If there are any others, please post them up. Steve's going to kick off now with a look at cryptocurrencies.
Thanks, Joe. Take a look at Bitcoin first. We had a bit of a rally over overnight, basically, and we'll drill down into that. Daily chart remains to look like it's topping out a little bit, or we've got this correction. We've had a 5-wave impulsive move higher, looking for an ABC correction at the moment. We're trading around quite a pivotal level, 23,815, and we can drill down onto the 4-hour chart and get a real look at why this is a key level. We had an uptrending support line which we broke through on Friday, and price has been remained below here, and it's broken through the cloud as well, so that's significant. Also, we tried to rally through that on Monday, midday Monday, failed, moved lower, and we're now retesting the bottom of that trend line, which it's a reverse trend line, we'll call it now. And also we've got the cloud resistance here. So although really sort of like on the hourly time frame, we've broken through the cloud, looking a bit more positive. We haven't taken out that previous swing high, so looks like it's just building a slight sideways rejection of this move, so be a little bit aware of that. Ethereum, price action on Ethereum is similar. On the daily chart, we look like we're in an ABC correction, so after the impulsive move higher, so and we're stalling around that 1730 level. That's been a real pivotal level historically, so that's the one to watch really. If we manage to get down below 1560, then we're under pressure again. On the 4-hour chart, we've got the Ichimoku cloud providing the resistance again. You can see we've stalled. It's a lower high we've posted just now, but you know, there's a bit of momentum to the upside, so let's see if that can play out or not. Ripple down below the 40-cent mark, for me that's bearish. That's really been a pivotal level for a long while now. Well, call it 1 cent really to be more accurate, but this downward trend in resistance line is really the one to watch. We really need to sort of like get price action above there to sort of open up the upside. So remains negative while we're below there and below the major moving averages. Let's dive into commodities. Take a look at gold first. The daily chart looks to be a corrective fourth wave according to the wave analysis here. We do have this bearish flag that I highlighted a while ago, and the measured move target was around 1790. 50% retracement would have been 1788. However, we look to have stalled over the last couple of days and reversed higher. We've got up to 1837 today, so looking pretty positive, although we do face resistance all the way up. The 4-hour chart banging its head against this cloud, so we do look like we could be bottoming out here in this move. We didn't manage to get down to 1790. 1805 we stalled at and reacted higher from there, so looking potentially positive, but it's got work to do. 1847.5 would be a break of the or a break of the sort of like lower highs, and a clear break of the cloud, and also break above the resistance that we have coming from the previous like Monday's price action. So that's definitely one to watch. Potential for a little bit of an uplift in gold. It'll probably be based around what happens in the dollar, which Joe's going to run through the potential of that in a short while. Silver has had a little bit of a bounce off the 2042 level. I think we had gone to the head trade last week, which was targeting a move to 2030. Didn't quite get there, obviously. Stalled in front of there. Had a move up this morning, although the 4-hour candle potentially forming a shooting star candle. We've still got about 3 hours to play out, so plenty of time to turn that around. Copper has had a nice rally over the last few days. We've seen the price action stall at 393. If we remember back, 396 was quite a key resistance level, which turned into a decent support level. We breached it ever so slightly on Friday and Monday's price action, but we've rallied quite aggressively higher since then. So challenging the Ichimoku cloud support here. There will be resistance around these levels. The more sort of intermediate resistance will be around 423 and then 435. So a nice little uplift in copper. I think we looked at palladium earlier in the week, and again we saw this sort of bottoming out Friday and a nice little reversal from here, so a bit of a turnaround. The sort of like resistance to look at the moment, 1467 before we try to challenge 1541, and support below is between 1393 and 1360. Crude oil has continued the move higher. Nice little bounce again from 73.82. We managed to get up to 77.83 yesterday. I think we've got some nice sort of daily resistance levels to look at. Coming in here, 77.64. You can see this highlighted from Monday and Tuesday's price action from last week. So trying desperately to get above the last week's high. But running into resistance at the moment. We've still got 102. We're still below the 100 and 200-day moving average and the cloud on the daily chart. So I remain negative in this downward trend, and potentially we're posting another lower high on crude oil. Support coming in at probably the low of last week, 73.85, 72.58, and 70.21. Brent crude oil trading at a premium of around about $6.30. Levels to watch in here. Price action pretty similar. Stalling at resistance at around about $84, just trading under there now. The cloud above 100-day moving average, just above that also. Above $84, we've got resistance at $86.70 and $89. Below, the support coming in at the last week's swing low, $80.31. 79, 77.60 and 75.26. Plenty of levels to sort of pick out of this. Looks like a bit of a triangle formation forming here. So looking for that explosive move out of that triangle formation. We'll see where it goes from there. Natural gas has bitten back at last. We have had that correction that we've been looking for. We've taken out the resistance level, well, stalled actually at the 1st of Feb's high, coming in at $2.80, and actually posted a hanging man candle yesterday. So be aware of that. That's not a nice candle to see if you're looking to get long of this or long of this or holding this from higher levels. Remember the gap in the chart up at around about 430 looks, you know, would be nice to fill that, but that seems like a long way off at the moment. So price action stalling at current levels, and on the hourly chart even, we look to have basically completed a 5-wave impulsive move higher, maybe looking for the correction. So is this potentially an opportunity to sell into this dead cat bounce? Who knows? We'll have a look. We'll have a go. We might have a go this morning, Joe.
Yeah, it sounded like you was gearing up for a go at it.
Yeah.
Okay, thank you very much, Steve. Let's move on to the FX markets then and take a look at dollar index to start with. So let's just bring up the chart here. Going to start off with the daily. So yesterday, reasonably positive day. We can see there was a green candle posted yesterday following the news that we had out about the consumer confidence. On the back foot again today, engulfing all of those gains actually. So off to a pretty bumpy start, indicating that there maybe is a bit more appetite for risk out there this morning to start the new month. Down by almost 0.5% on the dollar index at the moment. So in terms of my short-term view, we have seen a break of this short-term downtrend, completed maybe a small bottom, maybe a pullback towards 103.62 could be on the cards to maybe retest that newly formed support before a potential bust upwards towards the 38.2% fib level at 106.15. So pretty sideways, pretty choppy at the moment in the dollar index, maybe forming a larger bottom here in the process, but for now it is on the back foot today, so maybe we can start looking for some riskier plays as a result of that. Let's take a look at euro US dollar, expecting to see the inverse here, and that's exactly what we're seeing. We can see a decent push to the upside today on euro US dollar. So wondering whether or not we've formed some sort of ending wedge here, which would indicate a move to the upside in the short term. So looking actually quite positive there in the short term on euro US dollar. Expecting resistance to be found at 108.85. But that's from a risk reward perspective, quite a decent potential move on offer there up to that resistance level with a stop loss below these recent lows. You're looking at about 2 to 1 on that if you were to look for a long setup today on euro US dollar. Obviously you may want to refine your entries by looking at the intraday charts, but short term looks like it's maybe got the legs to have a bit of a bounce higher. Maybe a bit concerned that we are forming a top pattern here, but there's no reason why you can't trade the legs in between that if indeed this is going to have a decent move to the upside. Let's take a look at cable. That's up quite substantially today, up 0.56% as things stand. So found support at 119.19 and looks to be bouncing. Again, maybe expecting the upside to be limited around 122.98, where I've got some resistance lines drawn on there. There was the potential for a double top to have formed, but it did need to break down below these lows here at 118.42 in order to confirm that. But we've had a pretty decent bounce here, so maybe we could be on for a move to the upside if we continue to see more dollar weakness. So expecting for now the prices to remain within this range for the time being. Let's take a look at Aussie US dollar, expecting that to be high today, given that we've got this dollar weakness, and that's up by 0.61% as things stand. It's come up just shy of a 50% Fibonacci retracement level. Potential for lower prices there following the break of that 38.2, but we've seen a couple of dojis posted and a decent turnaround candle today. So that may be trying to mimic what we've just seen on the euro dollar chart and potentially forming some sort of ending wedge. Needs to do a little bit more before we can get too excited about that. Let's get rid of those extensions there just so we can tidy that up. Looking something like that potentially. So we'll have to wait and see. But does appear to be a pretty reasonable amount of risk appetite around today to start the new month. Let's look at New Zealand dollar versus US dollar, similar situation. We did see a breakdown here to complete a double top through 61.91, and we're back through that level again now. And again, potential here for maybe a bit of a broken triangle pattern, which could indicate that we may see a move to the upside. So these are all looking pretty strong at the minute. So that may indicate that that is the floor. The 38.2% fib level has done its job. And following the break of this wedge or triangle pattern, we may actually see a reasonable push to the upside in the short term, potentially towards these levels at 64.68. So yeah, it looks as though it's very much a risk-on environment this morning. Okay, what else have we got? Dollar yen, let's take a quick look there. So that has stalled at 38.2% fib level. We posted a doji candle yesterday, having had a minor look above that resistance level, but closing firmly below it. So maybe run out of a bit of steam here. We may see some yen strength in the short term that will maybe drive this a little bit lower. Let's take a look at dollar Swiss. Following the breakout of the channel here, decent day yesterday. Swiss franc equally as the US dollar is sort of holding firm, not really going anywhere. So it's still favouring the US dollar a little bit here. Looking for a move towards that 38.2% fib level at 94.75. And dollar CAD, still a bit range bound here. Decent day yesterday. Major resistance levels here between 136.82 to 137.00. So unless it can get above those levels, we may continue to see the upside capped in dollar CAD for the time being. Okay, a couple of requests. Let's take a look at Euro New Zealand dollar first of all. So interesting day on this yesterday. This is the daily chart. We can see that it's been grinding higher really since the middle of December. And yesterday we actually hit a 78.6% fib level of this entire down move. So from the highs that we posted in October down to these lows in December, the 78.6% was at 172.91. We came up just shy of that, but then posted this bearish outside day candle yesterday. So that indicates a pretty significant reversal. And the fact that it was into a major fib level as well gives us even more confidence that maybe we are going to see a corrective move lower here on Euro New Zealand dollar. If we take a look at the intraday chart to see what's happening here, we can see this reversal yesterday happen pretty aggressively and pretty sharply. Bit of a bounce taking place over the last couple of hours or so, but I think the short-term bias is now negative, given that we've got that bearish candle on the daily chart. Let's take a look at Swiss franc versus the Japanese yen. I really quite like this actually. Feel that there might be some opportunities here potentially. So first of all, let's take a look at the daily. So we can see here there are a sequence of lower highs. So that indicates a downtrend, and we've also got lower lows. The lowest point that we reached was in January, and that was down at around 137.43. Yesterday, the rally that we've seen from that point appeared to run out of steam at the 61.8% fib level and the downtrend resistance line, and we posted a bearish outside day. So we made new highs on the session, but then closed below the lows of the previous day, which indicates the turnaround. So looks as though we may be ready for a bit of a pullback here on Swiss franc versus the Japanese yen. And if we take a look at the intraday charts, looks as though we are getting some sort of topping formations as well. Arguably, we had a left shoulder here, followed by a head, followed by a right shoulder, but then broke down. I had a measured move target of that down at 143.40, which it didn't get to. So maybe we can invalidate that now because we actually went on to make a new high. But potentially, we're in the process of forming another one here in the shorter term. Over the last hour, we saw a pretty negative candle here. I've actually eyeing up an entry at 144.95 to try and get short into that, assuming this is going to be a right shoulder, and then looking for a move to the downside, and buoyed by the fact that we've got that negative candle on the daily chart. So that really kind of sets the sentiment and the tone for me on this particular market. So I think that's a good spot mark, providing you were looking to short it as well, of course. But I think there's potential here on the downside. And in terms of the target, we can do a measured move of this potential head and shoulders because it hasn't completed yet. So potentially some very, very nice risk reward on offer here. If this does indeed fail to get above this right shoulder and then eventually breaks down, we could be looking at targets down at 142.52, which is around 8.5 as a risk reward ratio on that today. So yeah, very interesting indeed. I don't think that there are any other requests. So, Steve, I'll throw it over to you and we can take a look at indices.
Excellent, mate. I'm going to go through the indices on the ISM charts, actually, because it's easier to then run into the gun-to-head trade idea. FTSE, start off with FTSE. We had a reversal, obviously, last week, just a reminder of what is going on. And we've made a new sort of 3-week low this week, but had a bit of a rally higher over the course of the last 18 hours. And it's been quite a nice little spike higher, and we've run into a little bit of resistance, forming this we basically on the daily chart. If we look at the daily chart, where we are from a wave perspective, really looking for a deeper correction lower, and still potential for that. We've basically got now resistance above, easy to show it on the 4-hour chart here. So for me, this is major. This is a major resistance here. It was a previous support level, worked really nicely on the 4-hour chart, and now it's acted as resistance on multiple occasions over the last few days. Nice little bounce from the lows, but we've posted a lower low, so still further potential on the downside. Really looking to take out probably this level down here at 78.28. So 79.31 resistance, only about 30 ticks higher than where we are now. That runs into the cloud, and this quite pivotal level, I think, in the overall terms of where we are in the trend. Sticking with the 4-hour chart, looking at DAX, similar sort of price action we've seen. We've had the move lower, had a nice little rally from Friday. Didn't really get the sort of like extended sell-off like that we got the FTSE. It stalled and has reversed sharply higher again. Resistance coming in probably around about, let me see, other levels to watch around here. Probably not. It's quite even if we go back to here, that's acted quite nicely, or reacted quite nicely from 15,460. Again, about 50 points below that at the moment, breaking up through the cloud, so looking a little bit positive. Posted this bullish hammer on the overnight price action, so looking quite tasty at the moment, but resistance up above, numerous resistance. We've got these lower highs that we can see. They'll all act as resistances on the challenge on the way up. EU50, similar sort of price action. We've got a nice like downward trending resistance line I can immediately refer to. That looks pretty good, so we could even get an idea if we manage to take out today's high at 4,263.5 or the 4,267. So take out that, and further upside is expected. A little bit of an inverse head and shoulders would be confirmed by that. So although it hasn't been a massive downtrend sell-off into it, we still get a similar sort of reactions when we get these formations during the sort of like different sideways trends. Major support really coming in at the down around about 4,170. So nice little formation there. Is it a potential continuation? We shall see. Moving on to the US 30. So the US market's not really getting that reaction that we've had in the UK and Europe. But we have had a little bit of a turnaround on the 4-hour chart. You can see a morning star formation, looking to bounce higher since. So overnight it's been pretty positive, but this downward trend is pretty ominous. So I don't think there's much life in this bounce, and I think any sort of like rallies towards the sort of 33,000 level, 31 to 33,000, sorry, 33,000 to 33,200 level are opportunities to sell into the downward trend on a sort of longer term basis. Nasdaq has performed okay as well. We've seen the bounce in a similar fashion, but we've still got plenty of resistance above 12,150 all the way up to 12,230. 12,230 probably given us a little bit more of a target to hit. Again, you can see this inverse head and shoulders potential, but still has to break the neckline to be considered valid. But I'll draw it in so that you can sort of like get an idea of what I'm looking at. So that would be a nice little correction. A measured move target for that, if it does break higher, would be a move up towards the 12,500 level. But I'd prefer to see it clear this 12,230 level before I got excited about it. It would still leave opportunity on the upside for a couple of 100 points. But yeah, that's I'd really, with this cloud here, I'd prefer to see some confirmation, some sort of stronger confirmation before jumping into there. S&P, similar sort of price action again. You could maybe call it a double bottom with the neckline up here. Break above the 4,018 level should open up the upside, but again, you see the resistance that we face, and even the previous support level will now act as resistance up at 4,050. So a little bit of a positive start to the day, shall we say? But faces really sort of like decent resistance, even if we do manage to get that extended bounce.
Okay, cool. Steve, just got to come back to an FX market quickly because Ali's requested a look at Aussie yen. So we'll just go with that. So this is the daily setup. As I've been talking about for a while, I think there's a big head and shoulders top pattern that formed on this market. The move to the upside, this corrective channel, has kind of overshot neckline of the pattern. I wouldn't say it's invalidated it yet. I think I'd probably still stick with that view unless that right shoulder's taken out, which is all the way up at 95.73. But we do face some resistance here. There's a 50% Fibonacci retracement level at 92.80, which seems to have prevented prices from moving higher. So it does appear as though we are trading within a corrective channel still. So potential maybe for a move to the downside. If we look at price action today, does seem to be some short-term support on offer around 91.29. And potentially a bit of a bullish engulfing candle as well. So still pretty early in the session, still seems to be a decent amount of risk appetite around, which is helping the Aussie at the moment. In terms of the intraday setup, we can see price is quite range bound here. So potentially an opportunity on the short side in the very short term to trade that very small range, maybe for a drop back down towards these levels here, which have acted as support on a couple of occasions now. So I think my overall bias does remain bearish on Aussie yen for the time being, but maybe one I'm going to steer clear of just for now because not really getting the sort of full confirmation on the dailies just yet. Hopefully that was useful. Let's move on to the gun to the head trade, Steve. So this is where both of us pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? Trade ideas must have stops and targets. They're placed at market, and they must have risk-reward ratios that are better than 2 to 1. Yesterday, we posted a couple of ideas up, and we did these on a live basis as well. Now, since the start of the year, we've been adding these to a real account, risking 1% each on our trades on a per-day basis. So I was looking for a stall in dollar yen yesterday, and was taking a cue on that on the market hitting resistance there at 136.72, and also posting a short-term 5-wave pattern. If we click the play button, we can see that at 9 o'clock there was actually on side by 1.61%. So
nice one,
that was a nice win. Actually got down to that first corrective A wave that was suggested by the automated Elliott wave count. So that was a nice move. Steve, you were looking for Euro stocks to sell off, and I think you were stopped out on this.
Yeah,
Stopped out, not by a lot, but yeah, it's back at those kind of highs again today, but still stalling, still below a major resistance there, it would seem.
Yeah, exactly.
Okay, so all in all, we made some money yesterday, which is good news. And let's go again today, Steve. Anything that's taken your fancy? You maybe indicated natural gas was lighting you up.
Yeah, it certainly is lighting me up, mate. I can't help it. I have tried before to buy the dip in this, and we've had a nice dip. Well, we've had an extended dip, but that we've had a little bit of a rally. But is it a dead cat bounce? A dead cat bounce is like a bounce that happens in markets that are doomed to move lower, and the rally gets everyone excited and thinks, oh yeah, it's gonna go through the moon. So yeah, on the daily chart, really, Really nice move higher we've seen over the last week. But we have now stalled at quite a key resistance level, probably one of the initial key levels. Actually, we moved through it. It's this swing high from Wednesday, the 8th, and also this was a support for 31st of Jan. So once we broke through it, it's acted as resistance nicely. This hanging man candle is a concern for me. It shows that the bears potentially are interested at these levels. They come in, they sell the market off, and the bulls win the day, but it leaves a little bit of a bitter taste. It might have, is it too much to defend? So for me, it provides a good risk reward. We've got this downward trend that we're following. There's no real sign that this is, reversing aggressively. It's quite a steady move higher over that period. So I'm going to go with that. I'm going to sort of see this as a short-term potential top, maybe followed by a correction. The Elliott wave automated tool is showing that the fifth wave is potentially complete, really looking for a reversal. 255, I think, would be maybe the ideal target to aim for into the cloud, but we've got some support down here. Some, we might not even get that. So yeah, looking to put this trade on here. I'm creating new order. I want to sell at market, take profit, stop loss. I want to risk 1%, and that's £18.74 on our account, which started at £2,000. We're down just below that at the moment. Stop I'd like to put it maybe at 280 would be nice. Targeting 260. That doesn't feel like 2.23 risk reward as well. I like that because that's the average that I normally hit. So allowing me to sell 365 nat gas US dollar. Bang, it's on. Obviously you have to give away a little bit on the spread, so got to take that into account. But yeah, targeting a move to 260. 280 is my stop. Getting short here at 274 or 274. Yeah, around about 274. So
Lovely.
yeah, that's my trade idea.
Boom, let's go. Right, I'm taking a look at Swiss franc versus Japanese yen. Mark mentioned this morning on the stream, and we took a look at this, and it was one that I'd already had lined up for a potential trade today. So I have actually got something on this on a personal basis, but we're going to get it on the Signal Center account as well. So we can see on the daily, we've got a downtrend in place. We've seen a 61.8% fib level cap the upside at 146.10. We see a bearish outside day posted yesterday on the daily candle. So all seems to be lining up from a higher time frame perspective. If we take a look at the intraday setup, this is the hourly chart, potentially forming a head and shoulders top here. It needs to get through this neckline here at 144.40 before we can really get excited about that. But I was looking for a retest of the level here at 144.95 to get my shots on with a fairly tight stop loss. So I'd like to sell this at market, Steve, with a stop at 145.23. Now, if this is going to be a head and shoulders, and it's a big if, then the measured move target is down at 142.52, which gives me a risk reward ratio, which is going to sound a bit mad, of 8.43.
What?
But I just really like the setup here. And yes, it might not get there in one day, but you've got to be in it to win it. And anything can happen when the Swiss, when you're involved in Swiss currencies and yen currencies, because they are both partial to a bit of intervention. So who knows what could happen today? But that's what I'm going with. Yeah, have you managed to get that on, Steve?
Just confirming. Want to do it at market 145.23.20 stop.
145.23. Yeah.
Yeah.
And a target at 142.
142.52.
Yeah.
Yes, we got it on, Joe. You're mad. You're mad. 6-1.
Yeah.
Isn't
Got the wave count in favour
you.
of me
Oh yeah,
as well.
exactly. Oh, hello. This could be a humdinger, Joe.
What's the 61.8 lining up at?
Yeah, 61.8 lines up at 142.23.
Oh yeah, so I'm just in ahead of that as well. So
Yeah, you're in front
it's
of
all
that.
lining up there.
So basically, you're just like in one fell swoop, just like recapture all our lost ground this year. January,
That's what I'm
February,
going
we've been
for.
down. So
Yeah, I had a good February, so I'm going to try and capitalise on that and go for a humdinger.
nice one. And if nat gas comes in, we'll be out partying.
Yeah, definitely. Or we might just have to use it to pay our gas bills. One of the two.
Yeah, true that. Well, no,
Okay.
if I'm selling that gas, everyone will really realise it's there's
Market's done.
the
It's
market's done.
finished. Yeah.
Yeah.
Don't worry about your energy bills anymore.
Yeah.
Steve's come to the rescue. Okay, right. Fair amount out on the calendar today that we need to be aware of. So 10 o'clock, we've got Bank of England Governor Andrew Bailey speaking. So that may turn the dial on anything linked to sterling around 10 a.m. this morning. We've got Germany consumer prices at 1 o'clock. That's not when they normally post data, is it? 1 o'clock?
No, it's not.
Bit of a spanner in the works there. So that's obviously going to be the latest read on inflation. So Germany being the biggest of the Eurozone economies, that will be well watched and could move Euro currencies and create some volatility. The big one today really is the US ISM manufacturing index. We've also got a services number due out on Friday, but this will be well watched today at 3 o'clock. Again, keep an eye out for anything linked to your US dollar positions. And at 3:30 UK time, we've got the US EIA crude oil inventory numbers. So if you're involved in any oil markets today, you need to be aware of this number. It's a weekly occurrence, should be pretty ingrained into you by now if you're a regular trader of oil markets. Okay, Steve, I think that's it from us today, unless you've got anything further to add.
No, nothing further to add about the conspiracy going around the Nord Stream 2 pipeline.
Oh no, the same conspiracy as before. Is there a new one?
Oh no, it's just like proof that US did it.
Oh no.
Yeah.
All right, let's end it there, shall we?
Yeah.
Before we get taken down.
Yeah, before we get taken offline.
Yeah. All right. Have a great day, everybody. Thanks for watching, and we will see you tomorrow.
See you later.